and I need, according to the engagement, I need to help them prepare the pay return. Okay, so what do I need to know about the pay return? Besides the overview, I'll go straight to the purpose of the pay return, which is DT 2008. The purpose of the pay return in the chart, just some inquiry, why did we divide the number of days Okumu and Okelo by 3? Because of the test, 3 years. We are looking at the average number of days they have been in Uganda for the last 3 years. That's why we divided by 3. We are looking at 3 years on average. How many days were you in Uganda? Okay. Continue to drop the questions in the chat. I'll pick them up at the end. We can discuss them. So the purpose of the DT 2008, which is the pay return form, this return is used by employers in Uganda to remit pay as you earn to the Uganda Revenue Authority on a monthly basis. It is the self-assessment form used to report the amount of taxes withheld from employees' wages and salaries, which is then paid to the government by the 15th day of the following month. So the Commissioner General, URA, is in charge of this form. He has sent the form out there. You can download it, as we saw last time, from the URA portal, and then you assess yourself. How much pay have you collected and how much are you supposed to pay? So that is the purpose of the pay return, DT 2008. So who are the chargeable persons? Who am I supposed to include on this return? You should include all individuals in the employment of the company. Everybody in the employment of the company must be included on the return. You must include the directors of the company. Very many people don't know that directors are also supposed to be on the return. Especially these private companies where the director is the owner and the director has no stipulated salary. They pick the money as and when they want. Please, if you're working for such a director, tell them, get a fixed salary. At least get a salary we can declare to URA. We know the company is yours. When you're broke, you just pick the money as you want. It's okay. But please, declare. Give yourself an appointment letter. Appoint yourself. And then have a fixed what? Salary. Because if you don't do that, URA is going to do it for you. As they're doing the tax audit, they're going to say, according to the deductions, according to the monies you've been removing from the bank account, this is your salary. So, as a tax advisor, tax employee, sit with your boss. Tell them, I know the company is yours. I know that. But give yourself a salary, please, because you're going to have issues with your A. We can deal with the other drawings on the account. That's okay. But we must have something that we can put on the return. So the directors of the company must be included on the return. Then number 3, all those workers who don't have appointment letters, but they have a fixed or ascertainable remuneration, like your son, like your daughter, like your wife. They're working for your hardware shop. They are working for your restaurant. They are working for your tax agency. But they don't have an appointment letter. They're your associates. But you're paying them. You're giving them fixed. It can be fixed. It can be ascertainable, because the tax law is saying ascertainable. The Commissioner General has the right to ascertain. Say, according to what you've been giving this person, yes, they don't have an appointment letter. They are not formally employed here, but they are getting something from this company. This is their salary. So all these people must be included. Help your client make sure they include all these people. Types of employment. We talked about the employment. As you're filing this return, you must know that the tax law splits employment into 2. We have primary employment, secondary employment. Now, for all my clients, I've advised them when they're onboarding an employee, they must ask them, is this your only employment or you have employment elsewhere? You need to come clean before the employer. Otherwise, the employer is going to be in trouble for not correctly classifying. Remember, this is their obligation. Okay? It is their obligation to ensure that they remit the correct. So, remitting correct tax includes understanding your employees. Are they in primary employment? Are they in secondary employment? You can do it. If they hide and they don't want to tell you, it will be on them, as long as you have it on record that you told us this was your primary employment. We have it on record. So you made us remit incorrect tax. So that one is not going to be on the employer. It is going to be on the employee for furnishing you wrong information. You see that? And I think the lawyers who are here, you know that uttering, I think they talk about uttering false judgments, uttering wrong information, misrepresenting facts is punishable by law. It's an offense. So as the employer, safeguard yourself, minimize that risk. As you're onboarding the employees, ask them, is this your primary employment or secondary employment? Anyway, where is the problem? The problem is on the tax implication. Let's look at primary employment. Primary employment is typically the situation where the person's main job or profession is full-time. Okay? You're full-time, and this is your main source of income. So we shall say you are under primary employment because this is your main job, this is your main profession, this is your full-time work, and this is your main, it's not a gig, okay? This is your main source of income. So in those circumstances, the employer will follow the rates shared, okay? Primary employment is the position selected by the employee to be regarded as their main source of income. You see that? What the employee has selected. So it is upon them to select. Whatever you tell me, I'll go with that. I'm not going to snoop around, to spy you around, to see whether you're telling the truth. No, as long as you put it on paper that I'm selecting, there will be two boxes. Is this your primary employment or secondary employment? Choose one. Then you put one box, primary employment, secondary employment. Make them sign that, they sign it. So whatever, if it is secondary and they take primary, that's not going to be your problem. Secondary employment. Secondary employment is also referred to as fixed tax rate. This refers to any additional job or work activity that a person might have in addition to their primary employment. It could be part-time, it could be temporary, it could even be voluntary work. What's the tax implication? All primary employers are supposed to withhold income tax following the pay rates shared in the previous slide. Secondary employers are required to withhold tax at a rate of 30 to 40%, fixed rate. A person filing the pay return must include the correct employee category in Schedule 1 under column 19 of the pay return DT 2008. On your screen is the return. This is a snapshot of the return. And under column 19, there is a question before you, the employer, the tax agent, the tax employee. The question is the employee in secondary employment or fixed tax rate? You must choose yes or no. According to what the employee told you, don't choose your own answer, please. Because the employee can say, but I never told you. I never told you this was my primary employment. Why did you say no? You get it? So the employer, the employee must tell you what to do. Is the employee in secondary employment or fixed tax rate? You must answer that question as you're completing the return. You will have this one. This one is yours. Do all employees need a tax identification number? It is now mandatory. As you're preparing the pay return, all employees you're going to include must have a tax identification number. The tax identification number of each employee must be included in column number 1 of Schedule 1 of the pay return DT2008. Let's go to the return. Right there is where you're going to put the TIN of the employee. Make sure to include the TIN for each employee in column 1 of Schedule 1 of the income tax return. I know the return anytime is going to be web-based. Okay? Even if it is web-based, even if it is offline, it is still the same thing. As I mentioned, it's just a transition from, it's just technology, advancement of technology that you can do it now on the web than offline. But it still remains the same. There's no change. Okay? Let's continue. Resident employees. Again, as a tax agent, tax consultant, advisor working on the client, working on this payroll, working on the return, you must know the people I'm handling. Are they resident? Are they non-resident? Why? Because resident employees are assessed for tax on all their worldwide employment income from all geographical sources of employment within and outside Uganda. However, if an employee has paid taxes on employment income and outside Uganda, they receive a tax credit for the tax paid on such income. For the non-residents, the expatriates, these are assessed for tax on only income they derive from sources in Uganda. On the return, again, you must state that. And this is column, the column between 19 and 20. The question is, select yes if non-resident. Why are you doing this? Because you want your RA to correctly assess this person. Because if you say the person is non-resident, you'll be, furnishing wrong information. If you say the person is resident, the rates are different. So you have to indicate under Schedule 1 of DT2008 whether the employee you're working on is resident or non-resident, and there's a place on the return. Employee versus consultant, another confusing area. Accordingly, an employee refers to the person engaged in employment. They have signed a contract of service, whether it is written, verbal, implied. As a tax agent, again, you must inspect these documents. You must inspect the appointment letters. Don't just file. Inspect. Ask your client, can I inspect the appointment letters? Because I need them. I want to see, did these people sign a contract of service or contract for services, as we are going to see. The responsibility for taxation, return submission, is with the employer, who must withhold the tax, file and submit DT2008 URA on a monthly basis before the 15th day of the following month. On the other hand, an independent consultant, by the way, sometimes you find, I have had clients before who don't even know. Say, but I don't know. This guy comes as and when. Where should we put this person? So you must be sharp enough as the tax agent. You must know and advise correctly. And we are saying that the independent consultant will be under a contract for services. A contract for services. There are many services, just giving you a service and is giving others a service. An independent consultant has an obligation to file their own return. So don't worry about this guy. They have the obligation to file their own return, which is DT2001. We shall be looking at it, the return for consultants. Income tax return for individuals with business. And also, they have to account for the withholding tax. So these guys, these fellows, don't put them on the payroll. Don't. Okay? Do not put them there because they are consultants. The minute you put them in the return, it will indicate they are your employees. You get it? So inspect, that's what I was saying, inspect the appointment letters. Separate consultants, independent consultants from the employees so that we can file the correct return. That marks the end of our second session. I'm picking up the questions in the chat. The second, okay, just an inquiry. Why did we, okay, that one I answered. In the situation a director cannot get a salary, is there any other return to be filed? Very good question from Simba. In the situation a director cannot get a salary, is there any other return to be filed for the directors? It cannot happen. I've tried it. This is the war I've had with URA. These guys, you cannot even mention that a director cannot get a salary. There is no way. Do you know what they do? They at URA, they'll give the director a salary of 1 million. They will give there's no way you can say, you know, our director does not get a salary. How? How does it survive? You see that? Our director does not receive a salary. How? Which is correct. Put yourself in the tax officer's shoes. Would you really take it that we have a director who doesn't receive a salary? Really? Seriously? Can that happen? It can't happen. So that's why you're here. I want to give you, remember when we are starting, I told you I want to give you all the knowledge I've acquired so that you don't make mistakes, so that you don't give wrong explanations and then you begin rotating around with these fellows at URA. Never say that. Never. At least you say our director earns 400,000. No, you cannot. It can't happen. You're actually trickling them to look at your things further. Never tell your officers that the director does not earn a salary. How do they survive? That other employees are earning, the director does not earn. Is he Jesus? Is this second Jesus coming? Is this the second Jesus who has come? Is that kind of thing? Then again, in the question, for people who are filing small business tax or presumptive, do the director also qualify for PAYE? No, small tax is only on the earnings of the company. The rest is constant. If you're an employee, you are an employee. Whether the business is small, whether the business is large, you are an employee. PAYE cuts across as long as you are employee, hairdresser, waitress, whatever, all those, positions. Mm? From Muhammad, does the employee TIN refer to his national card or passport? No, 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 no. The TIN is what is generated from your RA, which is different from your NIN. Your NIN is different from your TIN, Muhammad. Those are two different numbers. From Fred, how many types of taxes returns are filed by a small business enterprise, and how often does the tax law mandate the filing of each? Well, we have a full session on small taxpayers. We shall be looking at the different taxes they pay. So you don't have to worry about that, Fred. Small taxpayers, we have that very nice session. You will enjoy it because there's so many clients you're going to get. Just go out there, members. You're going to get clients. Don't shy away. Give people business cards. I'm a tax agent. I'm a tax consultant. Heavy taxes. You make money. So we shall be talking about small taxpayers there. Very interesting discussion there. Landon, must all non-residents file annual returns? Yes, you must file. That's why non-residents have tax agents. According to the Tax Procedures Code Act, if you're non-resident, you must, by it's a requirement, you must get a tax agent to manage your taxes in Uganda. So non-residents file returns through their tax agents. What happens if the director does not earn a salary because the business is in losses but earns from another employer? Does he still have to furnish a return? Absolutely. Absolutely. That's what I was saying. If you never say that the director does not earn a salary, at least you file near return. Where there is salary, put 0. Then you explain that we didn't make any money. But then again, the accountant will tell you a loss is after deducting expenses. You know how we get losses? Losses are income minus expenses. Within the expenses, there is a salary. So most likely, a loss-making company will pay taxes but continues to make losses. There's no way you are a pay. You are joking. It's one of the areas you can't joke around. Pay as long as someone is employed. You at least file new return. Like in COVID-19, I was filing new returns for all my clients. Nil, because people were not working. But again, we couldn't just sleep and say, URA knows we are in COVID lockdown. They want their return, even if it has 0 in it. At least you put 0 and file. Then from Nancy, does one have to do director's returns if they have already been included? You don't have to. That is the advantage. If you have already included these people in the general return, you don't have to do the director's return. But because of courtesy, and also, I'm sorry, but you're going to lose money if you do that, Nancy. You do it in the other main return, but also file the director's return where you're informing URA, we are going to go through the director's return. We are going to go through the direct, and we shall paint this picture where the return has already been, the filing has already been made in the main return. How are you going to file your return? So please, you will lose revenue if you begin saying, now you see, we have already done this, so let's just not do it, because you do it because it's supposed to be done, and then you get paid. Okay? Then you get paid. So those were the questions. Thank you so much for the questions coming through. Please ask me